featuring daily chart of High Flyer Salesforce. Um, we are looking at the daily chart. And what we're going to talk about is where that top was put in and how that daily reversal happened and how we had a gap open down sequence in price to the support level. One of the other things is that there are several little gaps that were involved with futures markets, like here's one. So you have 1, 2, and 3, and now you have one gap down here, and this one was pretty severe. So any move up in Salesforce to the upside is trading that short squeeze at times, because it does have price volatility to it, is I would set my shorts up there right below this trend line as my best opportunity. That is also part of the high of this bar right here, the value of this bar. So that trend line goes over there, and maybe take the 120 and then minus like let's say you put a short out there, whatever 3 teenies is up. Limit that order out because it will sell into the rally with the indexes today. Right now it's 5:31 a.m. Pacific Standard Time, 12/13/2011. Our main key focus of interest is how weakness starts to build, and where will this next major breakdown at this support level on Salesforce happen. Stay tuned. Fritz, it's all about the buy and sell transaction and these gaps. And what you're going to want to see today in the application in your market maker is that negative ratio is printing down, but every time it comes up, keeps printing down and makes a whole series of intraday low prints. But in the opening bell volatility on a 3-minute chart, they can walk the shorts up to a certain teeny level, and you would look for the intraday red bar reversal next to the green bar, and that the red bar reversals are much greater than the previous bar. Then you know it's on. Just remember Salesforce daily chart, how to sell short, how to understand and learn from the walking the market up, walking it up to the 125 area reversal from down here. Okay, as Fritz said, 103 right up here. Now, the training and the live entries will be why am I going to have to come down here and test, and how does the gravity of the reversal either consolidates the reversal before breaking down, but every move up would be a sell short into the higher teeny levels, 3 teenies above. Set the alarms at 1 and 2 teenies, so if it goes off and you're right there in front of it, you can make a good transaction for a rollover. And you would be looking for big fat red bars on a 3-minute chart. They would look like this next, and you would get your entries. This is a daily chart. How to fill in the gap sequence, and as that is happening, how do I get paid? And how do I know that every opportunity on the intraday high is going to be a short opportunity? And we can even take a look at the put structure. We are featuring it 33 minutes into the pre-market opening bell futures. And it's actually gapping up because we can see 116.60s went off. And there's that bid, 117.07. And it's also $1 exactly from that close to the high of the ask. But most importantly, right now, you're seeing that narrow contraction at 116.17 on the bid. And these people here are trying to get a pre-market short in pre-market using futures market and selling short into that first weakness. Monitor that price action closing below the previous half bar. Salesforce, short into resistance.